Treasurer Jim Chalmers says the worst is over for inflation. BHP's share price hits a record high, and the Royals help Netflix stage a remarkable comeback. It's Monday, the 23rd of January, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Am I allowed to say I'm pretty happy everything's back to normal this week?
Well, everything is completely back to normal, and you are more than welcome to say that you're happy about that.
I'm very excited about it. I mean, 23/1/23, that's the date. What a great, what an auspicious way to get things back to normal.
I don't think the date is particularly relevant, but you are right that everything is back to normal today. We've got normal episodes. Our interviews are back. The week ahead with Stephen Koukoulas is back. The afternoon edition is back if you want your business news in the afternoon. And also the Fast Five by Fear and Greed is back to normal as well. If you haven't heard of the Fast Five, you basically, you find it wherever you listen to podcasts. You just search for Fast Five by Fear and Greed. It's basically perfect for if you're short on time and just need the top 5 business stories in 5 minutes. But Sean, I mentioned that the interviews are back to normal today, and you've got a really good one coming up with Louise Davidson, the Chief Executive of the Australian Council of Superannuation Investors. I love hearing what Louise has to say because of that stat that you mentioned during the interview, that her members on average own 10% of every company on the ASX 200.
Incredible, isn't it? The influence of her members, of Louise's members at AXI, really is far-reaching. And today we're talking about how super funds are putting pressure on companies as they transition to a greener economy. No one or no grouping can put more pressure on a listed company than shareholders, and AXI represents kind of some of the biggest shareholders. So it's a fascinating chat.
Yeah, it's coming up a little bit later on, so stick around for that one. But the main story this morning, Sean, Federal Treasurer Jim Chalmers says that the worst of the inflation crisis is over, but prices will remain higher than comfortable for a while yet.
Yes, his comments came ahead of this week's Consumer Price Index data, which is expected to show price rises peaking during the December quarter. And as has happened in the US, pressure on prices are somewhat dissipating and are expected to do so in coming months due to a number of factors, including a slowdown in demand, factories in China firing up again, and cheaper shipping costs. Dr. Chalmers said Australia still has a big inflation challenge, even as we pass through the peak of price rises. Helping the Treasurer's argument was new analysis from the Department of Treasury, that's his department, that shows that the government's intervention in the energy market late last year has already started slowing the rise of electricity prices. Dr. Chalmers said that the analysis shows the action is making a meaningful difference to the price increases forecast in the October budget. But opposition leader Peter Dutton disagreed, saying the Treasurer was just pushing spin ahead of the May budget.
Now, Sean, there's a question I want to ask you about this, but I do it knowing that I am probably at risk of receiving a slight economics lesson from you. But I'm going to ask it anyway because I suspect it's what everybody wants to know. If inflation has peaked, does that mean that we might get some relief from interest rate rises?
Well, yes, it's a good question. We know that the Reserve Bank lifted interest rates by 3 percentage points last year. Basically, that means if you have a standard variable mortgage, it went from about 3 point something to 6 point something last year. More economists are coming out saying it's time for the central bank to pause. Over the weekend, it was Commonwealth Bank's Gareth Aird, AMP Shane Oliver, along with our own Stephen Koukoulas. He talks about this in our interview after this show. They all argue exactly the same way. Definitely this week's inflation data, if lower than expected, will give the Reserve Bank a reason to pause. So if inflation does come off the boil, there's no doubt that interest rates should stop rising, or at least there won't be as many hikes as the Reserve Bank might have thought late last year. That wasn't an economics lesson, was it?
No, it really wasn't actually. And I suspect that you are much like the parents disguising kind of vegetables in the spaghetti bolognese, that you found this way of kind of just gently kind of coating your economics lessons in very kind of conversational phrases and sayings. And I just absorbed every single thing you just said.
You know, the funny thing about economics, right? It's actually not very difficult except for the jargon. So if you can actually understand the jargon, economics is just common sense. That's what I love about Stephen Koukoulas. Stephen, you'll ask Stephen a question and you can see his mind, or hear his mind ticking through, so what would I do if that happened to me? Well, and that's what economics is. It's common sense kind of couched in sometimes very difficult language.
Well, I reckon if I had had you or Stephen Koukoulas as my economics teacher in year 11, I would have gone a whole lot better at it than I did.
Yes. Well, if I had Stephen Koukoulas next to me, I would have gone a lot better too.
He is very, very good. It's worth sticking around for the week ahead, which is coming up a little bit later on. But Sean, hopes that rates won't rise certainly haven't hurt the local share market. On Friday, BHP's share price pushed through the $50 mark for the first time. That's good news for the hundreds of thousands of shareholders in the big Australian.
It sure is. Iron ore prices pushed through $125 a tonne late last week. That pushed BHP's share price higher. Now, the miner's share price hit $47.50 in June last year, then trended lower until about early November. Since then, it's jumped by about a third to its close of $49.95 on Friday. At one point during Friday, it pushed above $50. Pretty impressive, really. Now, boss Mike Henry said China's pro-growth policies, including in the property sector, and an easing in COVID-19 policies were expected to drive iron ore demand this year. Having said that, Beijing is taking action to try and put downward pressure on iron ore prices. But right now, BHP is a beneficiary.
Yeah, BHP no doubt helped the local equity market on Friday.
Sure did. The S&P ASX 200 finished up slightly, 0.2% to 7,452 points. It's the highest close since last April. Now, it finished off a really strong week for the market. There wasn't a huge amount going on with the banks weak and the miners strong. This week, that'll all change because of those consumer price index figures, which are due out on Wednesday. They will be very closely watched and they will help set a direction for the market. Also, we should open stronger today simply because what happened on Wall Street over the weekend. The broad-based S&P 500 and tech-heavy NASDAQ both ended up more than 1.5%. Earnings season over there, that's the December quarter earnings season, has generally been pretty strong. A couple of the banks haven't been so good, but otherwise it's been good, and that should help our market. Just finally, there was a fair bit of corporate news around late last week. The Fair Work Ombudsman has taken legal action against Super Retail Group. That's the one that owns Rebel Sports, Supercheap Auto, BCF and Macpac over a 2018 back pay review relating to underpayments. And quickly, the best performer on Friday was Pilbara Minerals after the lithium producer released its December quarter update. It was up more than 10%. Worst was also a lithium play, though, Liontown Resources, after an update showed costs on the rise at its Kathleen Valley project in Western Australia. Plenty going on in markets, and we're only in the third week of the year.
All right, we'll be back in a moment with the rest of the day's business news. Sean, the housing market comes out of hibernation this week with Australia Day marking the end of the unofficial break. Could all this talk of interest rate pauses help what we obviously know is a struggling market?
Definitely. You are learning economics, Michael.
It didn't take long, did it? 10 minutes.
Interest rates are the single biggest influence on what happens to house prices. 2022 was the largest calendar year decline in home values since 2008, with the biggest falls coming in the middle of the year. Now, we all know Sydney was the worst performing market. The best performing market, Michael, was actually regional South Australia, where prices on average were up about 17%. What will be interesting in coming weeks is the volume of homes on the market. Now, sales volumes last year were down 17% compared to a year earlier, which was particularly strong, according to CoreLogic. And properties in the December quarter, on average, took 34 days to sell, up from a low of 20 days about a year earlier. Now, the clearance rate finished last year around 55%. And all those numbers, sales volumes, how long it takes to sell a property, clearance rates, we'll watch those very closely in coming weeks just to see the trajectory of the housing market across the different states and regions. It's going to be a really interesting 2023 for that market.
Sean, there was another turn back for a Qantas flight overnight, which was coming in from Fiji. Pilots were alerted to fumes in the cabin and returned to Nandi, where the plane landed safely. It is, however, the fifth turn back in the last week for the national carrier.
That's right, Michael. We had last night and then last week, there seemed to be a run of them. On Friday, for example, a flight from Sydney to Melbourne was forced to return to Tullamarine just 10 minutes into its journey. The Boeing 737 touched down safely. In a statement, Qantas said the plane returned to Melbourne as a precaution after the pilots were alerted to a minor engine issue. But of course, no one likes to hear about turnbacks for planes. They're not that uncommon. Qantas normally averages around one turnback a week, but we've had 5 in the last week. Makes you somewhat uncomfortable as a traveller, Michael.
Just a little bit. Now, the coalition's $319 billion Gonski 2.0 funding has done little to arrest falling academic performance and school attendance rates. This is according to a review of the system, and clear goals should be imposed on future agreements.
Yes, the Productivity Commission's final report into the 5-year federal state funding agreement doesn't paint a rosy picture, suggesting the system needs a redesign with greater emphasis on lifting academic results and supporting well-being. The Productivity Commission has called on states and territories to adopt targets to reduce the proportion of students who don't meet basic levels of literacy and numeracy, while also improving attendance rates. Commissioner Natalie Siegel-Brown said so far the National School Reform Agreement has had little impact on literacy and numeracy results. It's very disappointing given how much effort went into it. Around 90,000 students every year do not meet NAPLAN minimum standards in reading or numeracy, and school attendance has declined since 2015, particularly in the middle years, 7 to 10. The PC report says the single most important factor to improve, not surprisingly, is teacher effectiveness.
And just quickly, Sean, while we're talking about Canberra, late last week there were more signs of the growing strength in the Canberra-Beijing relationship.
Yes, the Chinese state news agency said Australia's Trade Minister Don Farrell will speak to his counterpart in Beijing in the near future. It followed a meeting of officials on the sidelines of the World Economic Forum in Davos. Australia is still pushing for a lifting of $20 billion in trade sanctions on our exports, and China has said it's open to negotiating with Canberra, though it doesn't want to run through the World Trade Organization. So just another small step in the right direction.
Australia has a new mega fund manager, Sean, with the Perpetual Pendal merger kicking off today with funds under management of close to $200 billion.
Yes, the new group was approved by the Supreme Court last month. It's been a tortuous ride for Perpetual, who pursued Pendal only to have some shareholders go very cold on the bid. Then a consortium made up of a private equity player and ASX-listed Regal made 2 bids for Perpetual. They were rejected. Anyway, the merger finally has been consummated, starts trading today.
Isn't that funny? It feels like there was just so much drama with all of that towards the end of last year that it's kind of wrapped up really quickly. That to now be, the 23rd of January, and it's all underway.
Yeah, I mean, it's always been the original timetable to start now. It's just that with that bid for Perpetual late last year, it kind of threw everything up in the air. But in the end, I mean, the bid was rejected and the actual timetable for the takeover had just continued as per usual. It's just that we sort of forgot about that. So I agree. Suddenly it's on us. And, Australia has a new mega fund manager.
Mega fund manager. I love that. An MFM, if you will.
Yeah.
I don't think that's going to catch on. Anyway, Sean, another year, another positive news story for Whitehaven, which is obviously one of the country's largest producers of coal. On Friday, it said that earnings in the 6 months to June this year will quadruple compared to last year.
Yes, that'll take profit for the half year to about $2.6 billion. I mean, I'm just thinking out loud here. That's kind of not many companies, BHP, obviously, the banks, that's about the same size as some of the banks. Quite incredible how much money this company's making.
Just to quadruple. I mean, that is extraordinary. I don't think I've ever actually said that before.
Yeah, well, I suppose the first 6 months of last year, coal prices hadn't surged yet because Russia hadn't invaded Ukraine. And there wasn't really the energy crisis. That sort of hit March, April, May. That's when prices went through the roof. So that's why they'll be able to quadruple. But, nonetheless, it's quite amazing. $2.6 billion for 6 months for a coal company. Incredible. Whitehaven's share price jumped 6% on Friday and it's 10 times higher than where it was 2.5 years ago. It's up more than 200% over the past year. And of course, along with other coal producers, companies like Stanmore Resources, New Hope Corporation and Yancoal Australia is among the best performers over the past 12 months. In fact, those 4 are the best performers over the past 4 months. Surely it can't keep going. Well, obviously some people think it can.
Yeah, seems so. Right, moving on to overseas news now, and New Zealand has a new Prime Minister, Chris Hipkins, who took on the job over the weekend after Jacinda Ardern resigned.
Love the name, Chris Hipkins.
Yeah, it's fun to say, isn't it?
Yeah, it's a fun name. The new Prime Minister promised to tackle inflation and the cost of living crisis in New Zealand, saying households were hurting. Mr Hipkins was confirmed as Labor's new leader and therefore the country's 41st Prime Minister yesterday afternoon after Labor MPs unanimously endorsed him in a caucus meeting in Wellington. He'll be sworn in as Prime Minister officially on Wednesday, but actually gave his first press conference, which they called him Prime Minister at, yesterday.
Now, Sean, a very serious story out of the United States. Overnight, a gunman has killed 10 people at a ballroom dance studio amid Lunar New Year celebrations and may have actually tried to target a second dance hall as well. As we record this, authorities are still searching for the suspect.
The shooting left 5 women and 5 men dead and wounded another 10 people. Then, 20 to 30 minutes later, a man with a gun, suspected to be the same person, entered another ballroom nearby. People wrestled the weapon away from him before he fled, according to Associated Press. Investigators are interested in a white cargo van that was seen in the area. The Sheriff's Department said he was still unidentified, but should be considered armed and dangerous. Very, very sad.
Yeah, sure is. How about this one, Sean? Brazil and Argentina are set to announce work on a common currency which could eventually create the world's second largest currency bloc.
South America's 2 biggest economies will discuss the plan at a summit in Buenos Aires this week and will invite other Latin American nations to join, according to a report in the Financial Times. The initial focus will be on how a new currency, which Brazil wants to call SUR, S-U-R, which is South, could boost regional trade and reduce reliance on the US dollar. It would initially run in parallel with the Brazilian real and Argentine peso. A currency that covered all of Latin America, Michael, would represent about 5% of global trade. Now, the euro is the biggest common currency. It encompasses about 14% of global trade. Of course, Latin America is a competitor with Australia, particularly Brazil, in terms of commodities. So if this common currency eventuates, it certainly would have an effect on us.
Sean, Netflix, the global streaming service, hasn't had a great run in recent years, and at one point in 2022 looked like it would lose subscribers, but thanks to some hit shows, some really big shows and movies, it added 7.7 million new subscribers last quarter.
Shares in Netflix surged after it said hit shows including Harry and Meghan, Wednesday, and Glass Onion had helped trigger a surge in subscriptions. Netflix has been listed for 21 years and its share price has gone from $1 to $320. Pretty good. Mind you, it peaked close to $700 in the middle of COVID. It has 230 million members and is easily the world's largest streaming service. But in the US, Netflix is only about 8% of free-to-air time, showing it still has plenty of opportunity.
Have you seen any of those? Harry and Meghan, Wednesday, Glass Onion?
No, none from 3. What about you?
Wednesday, great TV series, and Glass Onion, fantastic film. Absolutely fantastic. One of those movies that I wish I hadn't seen it so that I could go and watch it again for the first time.
Ah, righto. I'll watch it then.
That's quite an endorsement. It's the second one, though, so you need to watch the first one first.
Okay.
All right, big show, Sean. Up next is the Fear and Greed Daily interview with Louise Davidson from the Australian Council of Superannuation Investors.
Yes, as we mentioned, AXI represents about 10% of shareholdings of ASX 200 companies. Very, very influential. We talk about the transition to green and how AXI is engaging with companies to help them, shall we say, maybe encourage is a better word, along that journey.
And we've also got the week ahead featuring our resident economist, Stephen Koukoulas, who is very excited. Big week ahead.
Yes, well, we've got the consumer price index figures on Wednesday. So Stephen loves inflation. Well, I know that he loves inflation. He loves talking about inflation, shall we say. And he also gives a bit of a rundown since it's his first week back. A bit of the rundown what's been happening over the last 2 or 3 weeks. Great chat.
Yeah, they're both coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Monday, the 23rd of January, 2023. Make sure you're following the podcast and join us online on Instagram, LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.